morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start this week our analysis, our free analysis with some of our wave counts. So let's start. Before we start, you can visit us on elliottwavestreet.com. Then under the membership tab, you are finding the plans that we offer. There is a first month trial on the 40 stocks or the full access, and you will get immediate access to an Elliott Wave world of live market analysis, trading plans, education, and more. So you can sign up right away on elliottwavestreet.com/membership. Let's start with the euro. All right. So last week we were talking about the price building this leg down, and we have a pretty steep leg to the downside, more than expected actually. And the price has been trying to recover, but those attempts are fairly more weaker than the impulse leg to the downside. So we have a strong move down, a weak move up, a strong move down, a weak move up. And here is starting to slow down the market. All right, so the plan here is to have an interesting wave forward. Look, when the market is going down, of course you're going to have different retrace, and if you try to buy those corrective waves at the end, you're going to have a lot of losses. But what if you wait for a decent, bigger than all the previous corrective waves reaction, and then that's what we call in Elliott wave 4, and then another move down, but is lower than the previous leg, that's what we call a wave 5, and at the rejection we go long. So that's the trading plan that we have for this week. Here I'm looking for a pretty decent wave 4, something powerful, maybe higher than this pivot, so something big, and then another leg down, and here is where I want to go long on the euro, right there. Right, that's the benefit of trading at the market extremes. When we trade at the market extremes, we have an extra advantage because we have room to book some profits. Even if the price then continues lower and is not the actual bottom, we can make some good money. Let's have a look at the S&P. The S&P is fantastic. This is a daily chart. So there is something to keep in mind. The high probability this year is to have the S&P at the 4,800 area or higher. So we are seeing discounts. Here was a nice discount. Here was a nice discount as well. Another opportunity to go long that we were talking. This one was a surprising move. Was not expected, but now that we have it, is great because we can have a pretty good setup that I'm going to explain on the lower time frames, the precise way to trigger the trade. So here we're expecting the price to continue a little bit lower and test this area. Also, we can have this trend line here. It's going to be key. And if we have the price testing this area and rejecting, is going to be the entry. I'm going to show you on the hourly chart in a second how to trigger the trade. But on the other hand, if we have a strong breakout, like this one here, like this candle, let's say that this same candle shows up here, clearly we're going to have a lower low in the S&P. And in that case, we're not going to have an entry because never the rejection happened, that we are going to see it on the hourly chart. So in that case, if we test this low, we will see if we have the rejection there. Here is the place to go long. And this would be just an ABC sequence. So let's leave the door open for this scenario. I believe the S&P is going to retrace before getting there, but let's leave that door open. So now let me show you what I'm doing on the lower time frames, how I'm going to trigger this trade based on the Elliott wave count. So I think this is a wave 4, right? This is a corrective war. So I'm looking for the price to break down this previous wave 3. So to continue moving down, maybe is slowing down. because that's important, not that aggressive. We don't want to see an aggressive candle crossing this area. And then when we are there, it would be fantastic to have a green candle, and that's the entry, the green candle, right? On the other hand, if the market accelerates here, it's going to be the other scenario that we are talking on the daily chart. It's going to open the door for something stronger. And there is an alternative entry, and is if price rejects from here. Let's say that the next candle is green and closes above this high, above this low, where the wave A in that case, right, finished. That's going to be an entry, because we're going to have buyers at higher prices. So my ideal entry is this one. This is the one that I'm looking for, like the ideal, but this will be an entry. If we see demand showing up here, that will be the entry. And the way to sit in our hands is if price accelerates here strongly or here, whatever, without looking back, without giving us the hook, without showing the slowdown at the support. Of course, we are not going to trigger in that case. So there we have the strategy, the tactic to follow the S&P from the Elliott wave perspective. Traders, if you want to receive our daily analysis, visit us on elliottwavestreet.com/membership, and you will find all the plans that we offer on a monthly basis with all the markets that we cover, and you can get access for just $19 the first month. Please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.